Good morning, everyone, and welcome to today's webinar. My name is Alex Paul from InvestorStream, and I'll be your host today. Today, we have Kalina Power Managing Director Ross MacLachlan, who will be providing an update on the company's current operations and recent developments. Following the presentation, Ross will be available to address any questions you may have. We'll attempt to get through as many questions as time permits, as obviously a lot of you have sent through a number of questions, so we'll try to get through as many as we can. Please feel free to send your questions through via the chat platform in the question pane in the GoToWebinar control panel. You can also email them to me at alex@investorstream.com.au. You can also download a copy of the presentation via the ASX. I understand it's been lodged this morning, so you should be able to access it via that platform. Finally, a copy of the webinar will also be available on Kalina's website and social media platforms later today. But for now, I'd like to throw it over to Ross to kick things off for us. Ross, the floor is yours.
Thank you, Alex. Thank you very much. Alex, I understand that we have a mix or a blend of existing investors, and I'm pleased to hear a number of new investors are looking at Kalina for the first time today. So I'd like to walk us through our general PowerPoint presentation with a view of trying to educate some folks that may not know a few things about our company and our technology, but also make sure that I'm not doing that at the expense of getting to the heart of the matter on this conversation, which is really, I'm hoping to spend some time talking about our recent announcement today of our MOU with Baker Hughes. If you go to the next slide, please. And just to remind folks and for any new investors, if there's a great opportunity to understand a lot about the Kalina cycle and how it works on a 7-minute video that's available on our website, and I encourage you to take a look at that if you can. It's a much better way of explaining our technology than I can do in a format of a presentation. So please do take a look. Thank you. Next slide. This presentation, if you go to the next slide, please. This presentation covers the general theme of what we're doing, but I just wanted to reemphasize a few things about Kalina Power. And I think it's particularly relevant today that we remind ourselves what we have been presenting to the market for some time, that our mission statement has been to establish a profitable business in Alberta that will serve as a platform to deploy the Kalina cycle technology to international markets and become a major player in the waste heat to power marketplace. This is very, very important, and we've been emphasizing, I think, for well over a year now, the importance of establishing supply chain partners that are capable of assisting us getting to this goal. And this is really what this is all about, and this announcement that we have with Baker Hughes is an example of the success that we're seeing in this endeavor, in this effort. The technology is ideally suited for this day and age to be able to take low-hanging fruit of industrial waste heat resources and make zero emissions power. And we know that we have applications across a range of industries, a complete range of industries, where we can make a difference, not in 5 years, not in 10 years, but right now. That's an important value proposition for investors to consider. It's also important to look at the fact that we have this technology application for billion-dollar markets. Each of these opportunities are significant. And right now, what is in front of us today in Alberta is over 300 megawatts of projects that are in development, with our first project, 64 megawatt Saddle Hills project, being in a shovel-ready position, pending environmental permit and some updates to our contract pricing. This MOU that we're going to talk about later today and the success that we're having would not be possible were not for having established a really remarkably fantastic team. And for folks that don't get to have a chance to really understand what this has represented, it's really the reasons why companies like Baker Hughes and others are taking us as seriously as they are, because we have the talent and the team that's capable of executing. Next slide, please. And this is why this is a compelling ESG investment, zero emissions power for massive and diverse global markets. Investors aren't just looking to put investments into environmentally friendly and sustainable technologies. They're looking to make money. And they're looking for opportunities to deploy their capital into companies that have opportunities to have a major impact globally with major international markets. Here are just a couple of the examples of the applications that we're involved with today. And modularizing the Kalina cycle technology in Alberta right now for one particular application, industrial waste heat to power, and for geothermal applications, is a significant step in this regard, because what this really means is giving ourselves the chance to have this technology ready to be deployed, and deployed as a product, and deploy it in markets around the world. Next slide, please. When people ask, how big is this market for waste heat? Well, just in the utility sector alone, the US Department of Energy estimates that the energy lost just in the utility sector, in other words, wasted heat, that opportunity to produce that much power is greater than the total energy use in all of Japan. It just gives you a sense. This was a quote that's from the US Department of Energy we found, and it really underscores what is really viewed as the low-hanging fruit in the industry today to go after this opportunity. Next slide, please. We know that we have a proven technology that's been proven and demonstrated in about 16 locations around the world. It's important to understand what waste heat to power does. As I mentioned earlier, there's a very good video that will demonstrate and illustrate how the Kalina cycle itself works. But in a sense, what we're really talking about, whether it's ourselves or others in this industry too, is to take low temperature sources of heat, and instead of being able to boil them to make water because the temperatures are insufficient, you can create a vapor from boiling effectively, a working fluid that has a lower boiling temperature than water. And this allows, in a closed loop system, the ability to drive create a vapor to drive a turbine that generates electricity. And the sector is significant. There are some major players in it, like Mitsubishi Heavy Industries and Ormat. And Ormat is a massive company in the sector who are primarily focused on geothermal applications of their technology. And I will tell you, we'll get to a little later when we do a comparison, there are significant opportunities because of the fact that we are about up to 40% more efficient than ORC. This opens up huge markets for us that our competitors cannot. Next slide, please. Here are just some of the comparisons which people can look at and review later on to give a highlight of what the differences between ORC and ourselves are. Next slide, please. I won't get into the weeds on our intellectual property, but apart from to say that this is one of the most substantial intellectual property portfolios in the industry. And we're continuing to add to our intellectual property portfolio. We've done that through a couple of acquisitions of patent portfolios from others, as well as developing our own and the ones that we had before previously, and they're all there for review. Next slide, please. Important for investors to understand what our business model is. Right now in Alberta, we are looking at select projects such as Saddle Hills, where we would own a portion of those projects. How we make money in doing that on projects which we own, we develop it, we spend our own money. That's money that is spent at risk. And then we look to have that money reimbursed to us for the work that we have put forth and the monies that we have spent. We then look to receive a 4% development fee in cash. That's based on the total CapEx of the entire project. And then we look to earn a free carried interest, equity interest of approximately 10%. And as all your listeners can understand, there are variations around some of these higher, some of them lower terms, et cetera, which all get negotiated depending on the performance of the project going forward. And then we also have an opportunity to license our technology and license to certain projects which the owners will not be, we will not be involved in the ownership of a project. And for example, that would apply to, say, a geothermal developer who wants to use the Kalina cycle in a geothermal project. They would look to license the technology from us. Or if in fact it was an industrial host that wanted to deploy the Kalina cycle technology to take advantage of their industrial waste heat from their industrial processes and make zero emissions power, we would then sell them a package, license it to them, and earn about $35,000 per megawatt per year, as well as additional engineering fees, etc. Next slide, please. Now, this memorandum of understanding with Baker Hughes, it does, I'm just reading from it here, but it's true. It marks a significant development in our company's mission to deploy applications at an industrial scale for international markets. It's very much one thing to go and have a technology where you're doing one project at a time, here and there, in different markets, in different applications. It's quite another to be able to have a relationship with a company that has an international reach, who's interested, very interested, in standardized modular design packages, which can be deployed to markets that need solutions now. They're not looking for solutions for 5 to 10 years from now, looking for solutions now. It is absolutely one of the things which we are really excited about at our company, because we thought that it would be taking us a while until we had such an agreement in place. We thought we would end up, we've been talking about this for a while, we've been talking to all of our investors for a while, that we're looking to develop our supply chain partners so that we're capable of industrializing this technology at an industrial scale for international markets. What we thought this would be taking some time to do and complete, depending on how well and how quickly we could execute Saddle Hills. And we're going to get to Saddle Hills in a moment, because Saddle Hills remains our #1 priority. But what has happened through this process? It has highlighted and really heightened our profile, not only in the Alberta market, but certainly with international supply chain partners, and especially with Baker Hughes. So we've been working with Baker Hughes now for over 2 years. I read somewhere from some comments that some investors had said, well, Baker Hughes isn't putting any money into this, and what's that really cost? They're just going to be a supply, this is just a supply deal, or just they're going to do this just because they can get an order. I can guarantee you that companies like Baker Hughes do not spend this much time and the money that they have spent in being able to show an engineer that they can modify their vapor turbines to work within the Kalina cycle for a couple of different applications, such that they're satisfied that they can put their name to such an endeavor with us, so that we can go after markets and develop packages of solutions based upon the Kalina cycle, starting, of course, with Saddle Hills, followed quickly by our applications in geothermal that we have for Klamath Hills. This is the type of thing that we are extremely excited about. So if we can move on to the next slide, please. I can tell you that were it not for a terrific technology, Baker Hughes would not be talking to us today. But were it not for an exceptional team, we would not have an MOU covering the breadth of development anticipated under that MOU with a company like Baker Hughes. We've demonstrated to them that we have the talent and the capability to not only execute on projects, but also provide engineered solutions that they can work with and have confidence in investing their time and energy in developing modular packages that we can deploy together. Go to the next slide, please. Now, our commercial priorities are laid out in the next few slides, but it reinforces the need to have supply chain partners like Baker Hughes. But it's also important to remind ourselves how this works. And I've seen a couple of questions that have come through the email traffic in the last few days since this announcement, and a lot of people share our enthusiasm on this for sure. But there's some people who don't really completely understand how this works, and I'd just like to make sure that we understand together how this works. Let's remember that at Saddle Hills, we're developing an advanced small-scale combined cycle project. And that means we're going to use a gas turbine that produces electricity. We take the waste heat from that gas turbine That gas turbine is supplied by Siemens Energy, by the way, a competitor to Baker Hughes. But we take the waste heat from that Siemens gas turbine, and we use our technology, the Kalina cycle, to extract that waste heat, create a vapor, and that vapor then drives a turbine supplied by Baker Hughes. That's a vapor turbine, different than a gas turbine. And that produces zero emissions energy. Project, we have modified our approach from having a fixed price lump sum turnkey project, which is all guaranteed. We've broken away from that to a self-managed contracting strategy, EPC strategy, which we believe will save us significant amounts of money, also provide us perhaps more, not perhaps, but significantly more control in terms of the deployment of the project. And this is all about developing a standardized, repeatable, modular design of this combined cycle package. Work was being done by Interflex on developing all the modules. They did a terrific job. I mean, they did a fantastic job on the engineering. And they also provided us very compelling opportunities with respect to the modularization of the technology. Right now, we're working with power engineers on some slight modifications to the technology package in conjunction with Baker Hughes to see how many of these modules that are in this Kalina cycle package can either be consolidated or at least done by Baker Hughes. At the end of the day, we fully expect that we'll have some of these modules done by Baker Hughes, perhaps some by others such as Interflex, and certainly if we deploy the project the way we're anticipating, there will be modules which Interflex will also do, which relate to the balance of the plant, but not the Kalina cycle itself. Next slide, please. We have commercial arrangements in place with Saddle Hills. As I mentioned, Siemens, which we've announced before, is a preferred vendor of gas turbines for these types of projects that we're doing in Alberta. Baker Hughes, we've mentioned this, and we're going to talk more about the Baker Hughes MOU and what it means a little bit later on. Power engineers, for those that don't know, one of the top ranked design and power industry firms in the business. And they have been associated in one way or another over the years with the Kalina cycle technology, and for years have now been, since we've come on board in the last 5 years, have been a very pivotal and important design partner for the Kalina cycle with our team. Next slide, please. And this is a carry on to understand why working initially with a priority on gas turbines is important. Now, there are some people, and it's a completely reasonable position to take, which is to say, why would we be working in today's renewable energy space, working with gas turbines? Is that a renewable energy? Well, I think most folks, including some prominent Australian pioneers in the industry, would acknowledge the fact that natural gas will continue to be, for some time, a very important transition energy source as we look to meet the growing demands for reduced carbon footprint in our industry and our power production. In addition to that, there is an established network of gas turbines around the globe, around the world, that are in operation today, many of which we call are operating naked. In other words, they do not have a bottoming cycle to them. And particularly, that represents an opportunity for us to market to them a very, very cost-efficient solution producing zero emissions power. And that will be what we can do and show at Saddle Hills. That's why we're working on Saddle Hills, to demonstrate this capability right out of the blocks and right away. So gas turbines represent an opportunity in the power industry. They also represent an opportunity in the major source of energy that is used for driving the pipeline compressions of natural gas and other fluids throughout the world. These are massive pipeline systems with compressor stations powered by gas turbines, and all of them represent an opportunity to tack on waste heat to power solutions, such as that we are developing and showing that we will be doing at Saddle Hills. And that's why gas turbines is our top priority. It's an immediate market, an immediate market that is massive and huge. Next slide, please. And hydrogen and LNG. Many of you will know there are lots of different ways that you can produce hydrogen. Hydrogen specifically can be produced very, very green and clean with using renewable sources. But in many cases, it is being produced with natural gas and other industrial processes that create a significant amount of heat. And that heat is an opportunity for us to tie into and make that process more efficient, just the same way that we were discussing in a moment ago with gas turbines. In addition to that, both LNG and hydrogen have a unique situation when after they have been liquefied and they are going to be regasified. It represents an opportunity for the Kalina cycle, and we have some intellectual property around this and some unique approaches that are going to be developed with the right partners, where we can show ways for that process to capture the energy, the latent energy that exists, and produce additional power. And there'll be more about that, and we're looking to work with qualified industrial partners to deploy that. Next slide, please. And we've talked about this before, but the oil sands in Western Canada are eager and keen. In fact, it is critical that they take steps, significant steps, to reduce the carbon footprint of that industry. It is estimated right now that in situations right now with the oil sands in Western Canada, there's a potential of over 2,000 megawatts of potential power to be produced from the water streams that come off of the oil sands extraction process that are in these fields where they are doing their work using steam assisted gravity drainage. The steam obviously will tell you that they're using hot water to do the extraction. That steam turns into hot water and stays quite warm for quite some time, and it represents a significant resource with which to make power in a similar way that you would with geothermal. We are working right now, and have been for some time, with a major international energy company who is looking to do a significant upgrade to their facilities. And Kalina is in their sights for an application initially for a 4 megawatt project that could lead up to 80 megawatts. So it's a significant opportunity. I will tell you though that this has not been moving as fast as we would have liked, because it all depends on one of their pilot projects which they're doing, which involves electromagnetic energy source for one of the applications. The pilot project is supposed to be wrapping up here shortly, and depending on the results of that, will then determine how they will configure something with Kalina going forward. When we hope to hear something more on that in the coming months. We thought the coming months would have been quite a while ago, but it still remains something that we're sort of on standby for. Next slide, please. And the next big priority for Kalina is, of course, on geothermal. This is something that we have already shown the Kalina cycle to be very, very effective and working very well on. But of course, what we really need to do is develop modularized packages of this, as we described earlier, such that we can deploy this as a viable product for different applications around the world. We know that there are several opportunities for us to get involved with quoting for our projects. And to do that cost effectively, this is one of our priorities that we also have with Baker Hughes, where we're going to be looking at using, we've already decided to select them, for example, on their turbo expander for applications with the Kalina cycle, but we'll also be looking at what they can do in terms of modularizing certain of the components for this application. We have reactivated the development, as we mentioned earlier, at Klamath Hills for this 10 megawatt geothermal project in Oregon. I can tell you right now that that project has been a viable project for some time, except for one thing, and the one thing has been that the utility offers, the best way I could say it is very unattractive pricing for even renewables such as geothermal, and you would find it hard to believe in this day and age, but that's the truth. However, there is an opportunity for us to do bilateral negotiations and contracts with major companies looking to contract for carbon offsets, and that has opened the door for us to go forward. Right now, we're in the process of taking steps to apply for our respective permits. Once we have our permits in hand, and we have already done some preliminary engineering, so what we will be doing is taking a design package out to some industrial partners to gauge their level of interest to ensure that that is economic and viable and meets our requirements to get a project done. Next slide, please. When folks talk about geothermal in the past, there's always been a concern about how much risk is associated with this business. But of course, it is turning out to become a very, very popular and very exciting opportunity. Simply put, it does represent an opportunity to provide base load power. And as a renewables, most renewables don't offer that ability, and this does. And so geothermal is anticipated to grow to 28% of electrical generation, according to the US Department of Energy. And of course, its application worldwide is significant wherever there are geothermal resources available. Next slide, please. Now, I wanted to highlight those last few examples for you to show you what our commercial priorities are. Saddle Hills, SAGD opportunities, LNG and geothermal, LNG and hydrogen, as well as geothermal applications. That is the spectrum of opportunities for us to work with Baker Hughes on over time, but in the order I just indicated to you, because those are our top priorities. There are a host of other significant, massive opportunities for Kalina to pursue because of the unique characteristics of our ability to handle extremely low temperature resources, heat source resources. Unlike our competition, we can handle lower temperatures efficiently and effectively. That doesn't mean we can do that and carry and burden that development ourselves. What that means is we need a supply chain partner that we can work with together. And together we can identify opportunities for different applications, not just projects, but different applications. Some of this would involve such as oceanic thermal energy conversion, as an example, one of the things which we're very actively involved with right now. But what I'm saying is there are a range of these different applications which we need to have broad-shouldered partners, supply chain partners that can identify these opportunities and work together on, as opposed to burdening the development costs ourselves. And that really is the essence of why we need to have these types of arrangements in place, such as the one we have with Baker Hughes. In conclusion, I hope that I've conveyed to any new investors looking at this deal and reinforce it with our current shareholders. We really do have an exceptional team, but more importantly today now we have really high quality partners in place. We have a superior and proven zero emissions technology. I think right now, certainly given the volatility we're seeing in the markets right now, we know there's been a lot of keen interest in money going into clean tech and money going into renewables. But this is an opportunity for folks to not only support an investment going into that same sector, but not with a long-term horizon on development, but rather a very near-term execution strategy. And the opportunity to see for in the long term, an opportunity to see this technology applied for billion-dollar markets across a really wide range of industrial sectors. We have a well-advanced commercial pipeline. We've got multiple near-term value drivers. And of course, we're seeing unprecedented government and institutional support for clean tech. We've mentioned before that we have been looking at pursuing a dual listing on the Toronto Exchange. It's not any surprise to anyone that the markets in the last few months have been anything less than encouraging. I think what we're all doing is waiting to see and ensure that we can tie something like this announcement with Baker Hughes together. And as these contracts begin to unfold with Baker Hughes and other advances that we're making on Saddle Hills and other projects come to bear fruit, we will think that that would be the ideal time to look at activating and pushing the button on getting this dual listing done. Thank you very much for that. And let's turn it over to Alex on the questions that we might have.
Thanks, Ross. We do have a lot of questions that have come through. Thank you for your presentation. The first one, surprise, surprise, is about the MOU. And I guess the MOU is interesting in that it is with such a heavy hitter in the industry. Can you just fill us in a bit more outside of the constraints of an ASX release, and just sort of go through I guess the finer details of the MOU. Does the MOU simply mean that Kalina will use Baker Hughes turbines in any plants that manage to get financed, or does it mean Baker Hughes will lend its weight and connections to land projects that will use Kalina cycle along with their turbines?
Okay, well, let's try. That's a long question, but I'll try and break it down if I can. Let's remember that what we're able to include in a news release summarizing an MOU that we have with a third party like Baker Hughes, we are somewhat limited. There are certain constraints in terms of what we can say, as you might naturally expect. And the MOU is really meant to be a framework and a precursor to what is anticipated as a series of agreements. And if you don't have a common understanding as to what your agreements look like, and that's why you really try to get yourself a document like an MOU in place, parties would not spend the time and energy with their engineering teams and their legal teams, et cetera, to start to do that kind of work unless everyone has a mutual understanding as to what's involved. So yes, there's a great deal more than just what we've been able to say, but the MOU itself really does highlight, of course, the broad. The fact is that there's a broad reach to this. We've been working with Baker Hughes now for over 2 years now. A significant amount of time and energy on their part has gone through, as well as ours. And the fact of the matter is that each of the applications that are described or that we allude to there require a formal definitive agreement. So let's just use Saddle Hills as an example. If all we wanted to do was simply give them a supply agreement for Saddle Hills, then I guess we are in fact moving to the contracting phase of just that very part of it. But we're looking for something more than that. We're looking for them to really literally give us an entire package of the Kalina cycle with as many of the modules that they think that they can actually engineer and provide, because they have an unbelievable record and track record with respect to modularization and deployment around the world. So there's an awful lot that's there, and there's a lot that's at stake. So of course, they're keen to get their first order in place with us. But as they went through this, and really what really triggered the relationship between us really came down to one thing. Late last year, when in our discussions with them, with their senior management, both in the United States and out of Italy, they were really keen and very excited around what they see as a major emerging market for small-scale combined cycle power plants. And the opportunity of using the Kalina cycle and what it could represents a big opportunity. Now, without getting into all the details, what I will tell you is we look at each of those types of projects as to where they're going to be built and who's going to build them. Are they being done by end user customers? If they're being done by end user customers, there's no reason for Baker Hughes or ourselves to put any money into those projects. If on the other hand, it's for projects that we might be building in a combined cycle project that is involving us, as in Kalina owning that, there might be opportunities to look at some deployment of cash from Baker Hughes. But that's not what's on the cards right now. What's on the cards right now is developing the package, the solution that we are looking for from Baker Hughes, so that we have a product collectively that we can sell. Whether we're selling it or they're selling it, the idea is to have a product that we can sell.
Thanks, Ross. So at present, as a small market cap ASX company with little project track history, I'd imagine it's pretty difficult to secure a $250 million debt financing to fund Saddle Hills. Is there any potential for Baker Hughes to take an equity stake or assist in some way through their financially strong position to help get this first project started?
What I will tell you is, well, first of all, let's deal with the fact that it's always difficult to get $250 million of project funding over the line. But market cap or not, this is the same situation we dealt with Pristine Power years ago. We're not going to be funding this project and owning all of this project. We're developing these projects to make money the way I showed and illustrated in our business model, in which case others will be the majority owners and the majority equity owners and stakeholders. So we're looking at funding this through infrastructure, major infrastructure funds looking to deploy their capital in this sector, and get a carried interest in the project. So yes, it's difficult to raise $250 million. It certainly would be, but our market cap really, I don't think, holds an awful lot of relevance in this particular case. As far as Baker Hughes is concerned, Baker Hughes is not in the business of deploying capital in projects. What they are, though, and they do have, and I won't be able to mention them by name, but they happen to have an international infrastructure arm, whose role is to work with Baker Hughes and their supply chain partners that they have to look at providing funding for such projects. And that's as much as I can say at this time.
So, Ross, can you just give us a bit of an update on the status of Klamath Hills? Do you have any resource information from drilling at Klamath Hills that might substantiate a viable geothermal project there? And I guess further to that, has the project progressed at all? And is it possible to provide a status update via the previously monthly updates?
Yeah, I think it really, when it comes to updates, I think the best advice that we've been given, and by the way, I can understand why some people would like to see regular monthly updates on each and every one of these different projects. But the advice that we repeatedly received for much of 2000 and the last half of 2021, and certainly even in the beginning of this year, has been, report to us when you've got something to report. Don't give us an update just, if you don't have anything to tell us. And I think that's really the key thing. But that being said, I think everyone needs to know Klamath Hills was ready to go. Like, Klamath Hills was ready to go. They had done enough drilling. They had done enough work. They had done enough preliminary engineering. I'm not saying it was all completed and finished, ready to close on a financing, but it was ready to go and go through the final stages to get it to the point where you could fund it. Were it not for the fact that there was a major change by the utility in terms of how it did funding for such renewable projects, and when it pulled the rug out of their feet from underneath their feet, just after we had really gotten involved, it left them in a very, very difficult situation. So, is it a viable project from a resource point of view? It seems it's a very viable project, and it is an exceptionally great location in the world. The Klamath Hills region, you can look at it, anyone who cares to look at it from a geothermal resource basin perspective, is regarded as one of the top areas in the world, particularly because the brine or the water that you have is very, very clean and clear. So it's always been a very good project. The only issue has been, what can you get for the power you're selling? And what has really changed in the last year has been the advent of seeing large companies coming in and wanting to buy the carbon offsets, and that's what's making a difference. So what we have done is, one thing at a time, we did our geothermal design package with power engineers, which we mentioned previously, to make sure that we had updated all of our numbers. We did that, and we are in the process right over the next, I think, few weeks, putting up our application together for the interconnection and the use of water applications that we need to do there.
Have you bid on any pipeline compressor stations? I imagine that Baker Hughes's gas turbines, the Nova LT12 turbines, will be used in those bids?
No, that's important to understand. We are not looking to bid gas turbines that Baker Hughes has. Their Nova LT12 turbines are their gas turbines. We're not looking to deploy their gas turbines for gas compression. What we're doing is we're looking to go into the established inventory of compressor stations that are using a variety of different manufacturers' gas turbines to drive those compressor stations. And we're looking to add waste heat recovery solution packages on the back of those turbines and use Baker Hughes vapor turbines to make power. Now, what has happened on pipeline compressor stations? We were told that there was going to be a major RFP almost a year ago that we thought we were going to be seeing last summer or by the fall. That has not materialized yet, and we suspect that part of the reason has been because of the delay on the federal government's long-awaited budget, which has recently come through. And we're going to be getting confirmation here shortly, but we believe from our read of it that waste heat recovery, waste heat to power solutions such as the Kalina technology will qualify for, in Canada, for the first time for a form of investment tax credit, which otherwise was not available. And that may well be the reason why the major pipeline companies have not put out their RFPs. It was pending that news, but we're staying and we're trying to be ready to be able to bid for that accordingly. And I can tell you that it's a significant, for us, it's a significant difference for us to be able to bid on these massively large projects, knowing that we have a partner, someone like Baker Hughes, to be able to co-bid with us would be significant.
Can you just provide the latest on any progress with regards to the oil sands project?
Yeah, Alex, I kind of did when I covered that. In the interest of time, I think we should move on, but just to remind everybody that that is going to be pending the results of their pilot work that they're doing with their magnetic energy recovery system that they're working with right now. So depending on the results of that pilot plant, we're hanging in there waiting for them to give us news on the next step.
So in your last webinar, you told investors that the environmental permit approval was imminent and the FNTP would follow shortly after. 6 months have passed. Can you just elaborate on that delay and why another period of environmental permit notification was required?
Yeah, sure. This has been a very, look, the most polite I can be is to say it's been very frustrating. But it has been a delay for a couple of different reasons. At first, we thought this was something that should have been able to be done literally a year ago, and then we were given advice to do with the COVID situation that they thought they could get everything done for us by August and September. So that was one of the delays. But then really what has changed has been following. The federal regulations and sentiment with respect to environmental standards has changed, as it has even in Alberta. I can tell you that the regulations, I'm just going to give you a rough idea, but the regulations for one of the key emissions criteria was at a certain level. And we were way below that level, way below that level. That notwithstanding that, the Alberta government decided that for any applications, they decided unilaterally as a policy directive. They didn't change the regulations, they just changed the policy directive, and they continued to change the criteria and lowered it and lowered it and lowered it. What I can tell you is we were always below it, but what they then did is they asked us to be below it at even different operating conditions, which we found again difficult. Each time there was one of these changes, it required a re-engineering, recalculation of all the mass flows and all the balances, et cetera, and it just led to one delay after another. That being said, I can tell you right now, we are something like I think we're like about half of what the regulations were required. We're well below it on every different spectrum, but we had to prove it across the entire spectrum. So that's a very frustrating thing for industry when you're trying to develop your projects. You go into it knowing what the regulations are, but then the policy directives change. That's what we're facing in Canada. That's what we're facing in Alberta. Safely to say, we know we've now achieved all that. And all we're now waiting for is the final confirmation that there are no local stakeholders objecting to the project, and when we get that, we should get our permit.
So just to sort of follow on from that, how soon should investors expect FNTP after the environmental permits are approved?
You know, I really don't want to make another forecast on that, because I would like to get the darn permit and make sure that the permit comes through exactly as I've described it, with all the different changes that we've had to see. And I don't want to find out that we get the permit, but there's a qualifier on it, we have to do something else. You know, we're so close to getting this permit thing done. I'd like to get the permit done. We're also in the process of just updating our numbers with respect to our quotes to make sure that we can satisfy investors that our numbers are in line. Let's remember, we've gone through massive amounts of industrial inflation over the last year. We're actually reasonably comfortable. Some of our numbers that we've anticipated, if we budget for, are coming through okay, but we want to get all that done. We will get that done. And then what we're doing is we're actually asking Baker Hughes to take a look here and see what they can do with respect to the modules on this package. And when we have that in place, then when we have better visibility in that place, I should say, when we have better visibility in all those items, then we'll start talking about timing in terms of FNTP. But I think what we don't want to have to do is come up with a number, come up with a date, and then be continuing looking at change. I think we should all know that we're making a lot of progress, and let's just see where we get to in the next little while here.
So how long did you engage with Baker Hughes prior to this MOU being executed? And can you just give us a flavour for the sort of things that they assessed before it was executed?
Can you repeat that last part of the question? Sorry about that.
Yeah, sure. So firstly, how long did you engage with Baker Hughes prior to the MOU being executed? And can you just give us a flavour for the sort of things that they assessed before they went ahead with the MOU?
Oh, I see. Okay, sure. Yeah, that was we started with just literally running a competitive bidding process 2 years ago with them, and they really stepped up as we went through the initial bid, and as we advanced through the process, they showed a level of engagement that was really quite unique and quite significant. They recognized and acknowledged, and I think all your listeners need to know this because some people have misrepresented, I think, the Kalina cycle in the past. You just can't use any vapor turbine. You have to modify your vapor turbine, which is really a steam turbine. You have to modify that steam turbine for this application. And there are unique things that have to be done, and they, over time, became increasingly confident and comfortable with what they were doing. They would not have gone and entered into an MOU were it just to supply us with a vapor turbine for Saddle Hills. What really turned the light on for them, as I mentioned earlier, is when they started to see a connection with us using an opportunity to use the Kalina cycle for small scale combined cycle applications. Don't forget, they're not just marketing this in places like Canada and Australia and in the United States. They're marketing this in jurisdictions around the world. Folks that are looking for, not folks, but communities that are looking for a 15 or 20 megawatt power package, or industry that needs a 15 or 20 megawatt power package, to be able to provide small scale combined cycle solutions that are available and can be delivered in the near term is a very compelling opportunity. And that's, I think, when the lights went on for them. And then, of course, the lights went on even bigger when they started understanding the variety of applications that the Kalina cycle represented. They started to look at this as a platform, and looking at it as a platform, I think, recognized this was something they should take seriously, and that's what led to an MOU.
So out of all the sectors where your technology can be deployed, is there one particular market that appeals to Baker Hughes where they see real potential? For example, gas-fired power stations or geothermal?
Yeah, it's the one I just mentioned. It's this, I think, well, I'll let them speak for themselves at some point, but I mean, I think what they see, what's exciting for them, I think, is the small scale combined cycle power plants, because in that case, what they're doing is that's when they're selling their gas turbine. That might be anywhere from 10 to 17 megawatts in size, and then you add a Kalina cycle anywhere from 3 to 8 megawatts in size. That's what they see as being an exciting opportunity for international markets.
I guess further to that, what aspects of the Kalina cycle technology appeal to Baker Hughes over other technologies that are out there, in your opinion?
Well, it's real simple. Everyone's finding it really simple. We make a lot more power than our competition. I mean, it's that simple. I mean, you're making an extra 20, 30, 40, 50% more power than your competition in different applications. That's pretty compelling. And frankly, whether it's on this application off of the back of a gas turbine, or whether it's especially true and especially evident on some of these other applications for low temperature heat sources, it makes for a very compelling argument.
Now, Ross, I think you have addressed why this MOU is non-exclusive and non-binding, but when you get to actual binding contracts, sometimes when a behemoth partners with a small company, the outcomes can be suboptimal for the smaller group. Can you just talk us through how much control and input with Kalina have with respect to individual projects, so you may maintain returns and margins?
Well, there's two things. I think what is important is to remember, you're talking about on projects. I don't think that we should be talking about projects. What I think what we should be talking about is when we develop different applications for the Kalina cycle, or different contracting solutions or packages for the Kalina cycle with Baker Hughes. At the end of the day, that's where the rubber hits the road, and what do the economics look like there for the respective parties. On the project side of things, where they're selling us or providing us with a package, that's pretty much straightforward. But I think the real test is going to be when we look at opportunities for these different applications around the globe. And when it comes to that, we're going to have to earn our stripes. We're going to have to be able to show that we present and create value. And then it's a question of how we share that value. And that's what that's all about. And I think the fact that it is not exclusive at this point in time puts us in not the driver's seat, but gives us a degree of control, because frankly, there are others that we can negotiate with if we don't get the right terms ultimately on these various applications. That being said, Baker Hughes has a very impressive track record of this very type of thing you're referring to. And there's many cases, I shouldn't say many cases, there's enough cases that we've been able to look at to satisfy ourselves that they seem to be an honest broker and looking for constructive outcomes with the various parties that they've dealt with.
Ross, are you looking to invite Baker Hughes into projects that are in your existing pipeline?
Our existing pipeline and projects that we do in Alberta, we have communicated to the market that the reason we need to use the Siemens gas turbine is because it's ideally suited for the power stations, the distributed generation power grid that's in Alberta, which means the maximum size can be 23 megawatts, and we can maximize that with a Siemens gas turbine, and Baker Hughes has one that's smaller and therefore doesn't maximize it. So therefore, in Alberta, for distributed power generation projects, we intend to continue to focus with the Siemens gas turbine. And then of course, we're going to want to use the Baker Hughes vapor turbine as part of our Kalina cycle package on the back of those Siemens gas turbines for any of the projects that we're doing in Alberta. That's exactly what we want to do. In the meantime, however, I should tell you, we do get inquiries. We have a few that have been highlighted to our attention because of what we're doing in Alberta. And for those small scale combined cycle projects in parts of the world where we'll not be able to properly service or get to, that's what we're in discussions right now with Baker Hughes as to how we work out the sharing of that information for them to pick up and run with the ball.
Thanks, Ross. We probably have time for 2 more questions before we wrap up. Can you just give us a little bit more color on who is in the data room and how many are looking at it?
Sure. We've mentioned before, we have 2 agents working with us who have been marketing this package for us. I can tell you that in New York City, our agent there has been able to narrow down the field, and we are now working with relatively closely with 3 firms, 2 of which are deeply into the data room and in discussions with ourselves, and the other one we're hoping to get into the data room shortly. These are 3 major international infrastructure funds, and you were mentioning earlier about how hard it would be to raise $250 million. It is hard. It is hard to raise $250 million. And with some folks, $250 million is just too much money. And for some others, it's not enough money. And I can tell you with at least 2 of those infrastructure funds, they're looking at this because they see a pipeline of projects that they're interested in looking at. And that's kind of why they're looking at something as small as $250 million. At the same time, we're also talking with a major international company who, well, actually, I think I'm fair to be a little more liberal than that. One of our major OEM partners that we're talking to about debt financing on the project, we're talking with them, and we're also speaking with several smaller Canadian infrastructure equity investors that are also interested in the project as well.
Thanks, Ross. And just one final question to finish off, if we can. Is the company in a better position now than 6 months ago? And if so, why?
Well, not to overstate the importance of this this MOU and this relationship with Baker Hughes, but for sure, this has really accelerated where we thought we would be. And I kind of alluded to that earlier. I mean, if let's just put it this way, if in a very short order of time, maybe I could answer the question slightly differently and use your words a little bit differently. Instead of saying, are we in a better position today? Why don't I say this, if things go to plan and we get through with any objections from any of the stakeholders, we expect to very shortly be in a situation where we have a fully permitted site at Saddle Hills. That's a significant thing. To be in a position where you have a fully permitted, shovel-ready, ready-to-go project is extremely good. So relative to where we were 6 months ago, that's a significant difference. Also, if we're in a situation where we have a major company like Baker Hughes looking at providing us with a packaged solution of the Kalina cycle, we'll be in a remarkable position, not just for Saddle Hills, but for other projects we want to do in Alberta, and literally to service markets around the globe. So if you're asking me where we are from a near-term perspective, we're remarkably further along. But in particular, when we look at our mission statement has always been, why are we doing these projects in Alberta? We're doing them so we establish some credibility, establish some commercial success, so that we can leverage the Kalina cycle and go after international markets and deploy the technology at an industrial scale. And what we've done with this MOU is we've laid the framework for that to happen. Now we have to execute on it.
Fantastic, Ross. Well, look, that's all the time we have today. Thank you all for joining me, and I'd also like to thank Ross for presenting and taking the time to answer some questions. As I mentioned before, a recording of the webinar will be on Kalina's website and social media platforms later today. I'd also direct people to download the presentation in its full format from the ASX platform. Now, Ross, just before I let you go, do you have any final comments to leave with us today?
I was going to make a joke, but I can't do it. You put me on the spot. Sorry about that. Nope. Thank you very much for the time. And I was delighted to have an opportunity to answer those questions. And if others have any other questions that they would like to ask, please send them through to Ben or the others, and they'll pass them on to me, and we'll get back to you.
Fantastic. Well, that wraps it up for us here. Thank you, everyone. All the best and have a great day. Thanks for joining us.
Thank you.